Hi, I'm Sarah Fauché, Community Engagement and Business Advisor with Elgin Business Resource Center. In today's mini business series, we'll be discussing the types of business structures and help your business idea come to life. It's important to note that while we're only discussing the basic and main types of business structures, there are more business structures than just the ones we'll be talking about today. So we'll discuss those main and popular business structure types, as well as some pros and cons of each, using some real life business examples. Sole proprietorship is where, of course, the business and the owner are the same legal entity. It's the simplest form of business organization. It's the easiest to set up. As well, you can begin to carry on your business as soon as you formulate your business name, register your business. You can still enter into contracts with this sole proprietorship format, and you can also hire employees. It does get a little bit more complicated when we go into those roles, but we're going to talk about Debbie, who's sole proprietorship of Cupcakes R Us, and Debbie does not have any current employees. She owns the business and runs it. So for Debbie, some of those pros for her is that it's operated by one person. She's a one-woman show. She decides what's going to happen when it's going to happen, and she enjoys that part of the business. There's a low startup cost, and she's exempt from any corporate business taxes. There's minimum regulation with setting up a sole proprietorship business. So this is often the way businesses start, and then if they decide that they would like to change their business format, oftentimes if there is a growth in the business, oftentimes they'll take on a partnership and then they'll change their business structure. Let's talk about some cons. So for Debbie, one of the major cons for her cupcake business is that there's unlimited liability. She's responsible for everything, so it all falls on her shoulders. There's no one to turn to. If there's a failure in a contract, then she's responsible for that. If eventually Debbie was to hire employees, she would be responsible for those employees. As well too, in the event of a legal issue or a lawsuit, they can seize Debbie's assets, personal assets, not just business assets, because the business and Debbie are one legal entity. The second type of business structure we'll be talking about is partnership. Of course, a partnership is where two or more individuals share the legal entity. These can be two or more individuals or two or more corporations. In our example, we're going to use Jack and Jim, who have partnered together to form JJ's Distillery. There are more than just one type of partnership. There are actually 4 different types of partnerships you can enter. We will not be getting into those details today. The pros of a partnership, they're fairly easy to form, easy to start. There's a bit of a shared management or work duty because there's 2 or more individuals or corporations. So 2 heads are better than 1 in many cases. There's also shared financing. So you're able to share when it comes to taxation, you can divide that. When it comes to the division of labor, you can divide that, as well as your knowledge skills and your availability to access capital or funding. And some of the cons of partnership, of course, they often do have conflicts. As much as they say 2 heads are better than 1, sometimes those 2 heads can disagree. And that may take a bit of time to deal with that conflict resolution. You're liable for all debts and obligations as a team when 2 or more individuals or corporations are partnered together. And a partnership agreement is required for every decision that is made. So there may be lower profit percentages because you have to divide that. There's also added partner liability. So you're responsible in many cases for what your partner does or does not do. And of course, we discussed the reality of conflict. The next topic we're going to be discussing, the business structure, is incorporation. So a new separate legal entity is established apart from your personal. This is the total opposite of the sole proprietorship, for example. So a corporation in its own legal entity can oftentimes be imagined as a pretend or imaginary person. So in this case, Sue's company is called Smith Inc., and Smith Inc. is its own entity. Some of the pros for Sue is that there's limited legal and financial liabilities. So when you're talking about liability, you have to guarantee that, if in the event that you are sued, it's not Sue being sued, it's the incorporation that's being sued. It's Smith Inc. that is being sued or is held liable. So there's a little bit of protection there. There are some tax advantages with incorporation. And one of the major pros of an incorporation as well is that the ownership is transferable and it continues on in its existence. So if something was to happen to Sue, her business is more easily sold. If she was to become deceased, her ownership could become transferable. And so oftentimes lenders will often give corporations lower rates for loans, which is a pro as well. And it's easier to get equity financing from investors. So some of the cons for an incorporation, they are expensive to start. There is a lot of regulations that are involved, as well as more complex record keeping and administration. So to set up an incorporation, you have to file articles of incorporation with the government and separate your bank account, of course, for the corporation. And there's also a separate tax filing system for incorporation. So essentially you're filing taxes personally once, and then for your incorporation twice. Closing a corporation is more difficult, and registering a corporation is more expensive. And the last business type that we'll be discussing is a cooperative. Again, it's important to note that there are many different types of cooperatives, but basically a structure is based on 2 or more owners, each having equal voting and profit sharing rights. So in this case, we're going to talk about 3 couples, so 6 individuals who are beginning a farm to table movement in a cooperative business. Every member of the cooperative or the business has an equal voice, regardless of how many shares they own. Profits and earnings are divided equally amongst the members. And it's important to know, again, that there are different types of co-ops or cooperatives in this case. Some of the pros in this farming example that we're talking about, this agricultural cooperative, is that workers or owners are more likely to pour their hearts and souls into a company when they are all owners. So they have an equal opportunity for distribution of liability, often can accomplish much more collectively than they could individually. So they're pooling their skills, they're pooling their commitment, and they're making some group decisions. Some of the cons of forming a cooperative is that it can be expensive to start, and it can involve more complex record keeping. Of course, the larger your cooperative is, that may involve way more record keeping. Some of the disadvantages are also the decision-making process, because you're consulting with so many members of this cooperative. That can take a great more time in order to come to terms with how your business is going to grow and become directed in the future. As always, it's important to mention that you should always consult with a lawyer about the legal and regulatory implications of starting a business and what business structure you intend to begin it as. I will include a link in the video description for more information, and visit serviceontario.ca for further direction on the business types that you're going to structure types that you may be interested in forming. Elgin Business Resource Center is here to help you. I've included a directory of all of our staff, including our telephone and extensions and email addresses, so that you can feel free to connect with us virtually at any time. We are still working and are here for you to spark your new business idea. Thanks for watching.